Questions would be over here. A while for anyone to stream in. Usually takes a while. I'll mute myself. Hi everyone, testing. All right, thanks. Testing. Okay, thanks everyone for tuning in. Just let me test my audio one more time. Testing. Maybe they speak closer. Testing. Hi everyone. Thanks for tuning into today's session. Right, today's session is the live trading session. Right, we'll be looking at some of the key market setups from a fundamental point of view and technical point of view for the week ahead. Okay. All right. So in today's session, what I want to encourage you guys, if you have questions, please send it through. Otherwise, you can ask again at the end of the session. One thing I want to share with you guys is that disclaimer: everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. Another promotion that I want to be telling you guys about is that IronFX, not only are we having the ground trading pricks, right, where we have a price pool of 500 grand, but also we also have the IronFX VIP room. So if you have questions after this webinar, right, and you don't want to wait for an entire week for us to meet us or ask us the questions, you can actually access our VIP room. You'll be able to find me and the other IronFX analysts in here, right, where you can practice your analysis with us, practice and can ask us, right? All you need to do is to have a live and funded IronFX account to get access to it. All right. If you want a little bit more information on how to get that, I'm going to send the link over here for you guys to go through. Okay. Now, let's begin today's session, right? Today's session will be focusing on, like I mentioned, the key technical and fundamental setups for the week ahead. All right. Your presenter today will be Keaton, right? So it's part of the team here at Everest Fortune Group, right? For finalists for the best FX and best equity research in 2019, 2020, and 2021. All right. So we usually work with the major financial institutions on helping them forecast where the markets are heading. But we have a special partnership with IronFX where we are bringing guys good stuff, the juicy stuff, the stuff that will bring your trading to the next level. All right, so I'm going to hand over time to Keaton. He'll be looking through some charts. He'll be looking through some fundamental news. If you have any questions on any of it, feel free to ask it in the question box, right? Sorry, the question box. And I hand over the time over to Keaton now. Right.
All right, thank you, Desmond. Hi, everyone. Good morning, good afternoon, and good evening from wherever you are tuning in.
Just need to check something real quick. Where's my mouse? Yeah. Yes, correct.
Yes. Okay. Perfect. All right. Thank you, Desmond. All right, guys. Okay. Ladies and gentlemen, good morning, good afternoon, and good evening from wherever you're tuning in once again. Okay. So today, before we start, let's just have a quick look at the calendar for this week. Okay. Where is? Oh, yep. Here we go. Okay. Okay. So this is the calendar from Forex Factory. Right. So we're going to look at this week some of the events. Let's quickly see what were some of the key economic events that were released this week. Right. Okay. Yeah. So of course. Okay. Okay. The two major announcements, right, with cash rate announcements were by the RBA and RBNZ, which are the Reserve Bank of Australia and New Zealand. So for Australia, the cash rate was left unchanged. The bank did not raise interest rates, whereas the Reserve Bank of New Zealand surprised markets by raising 50 basis points instead of 25. 25 basis points was the figure everyone was widely expecting, but they surprised everyone and they raised 50 basis points. So with that, let's just perhaps start by looking into the Australian dollar, the Aussie USD pair and the Kiwi. Okay, let's probably start with that. That'll be a good pair pair to start with. Okay, right. So let's see. Okay, so we're here on the 4 hour chart. Okay, let's just clear everything first so that it's easy to visualize and let's start from a blank canvas so that we can see how we can draw uh, support and resistance lines as well as our Fibonacci lines where applicable. Okay, so we have here, right, Sunday, Tuesday. Yep. Okay. So we had the RBA announcement made on Tuesday, 4th April, 12:30 p.m. Singapore time, which was that's basically UTC +8. Right, and here we are. Okay, I'm just going to switch this to UTC +8 so this will be easier to, at least for me to reference the time. And here we go. Where is it? Yep. Okay. So 12:30. Yep. Hang on. Yeah. Okay. So this is the 4 hour chart. So let's just zoom in on the 1 hour chart. So as you can see, on 4th April. Okay, just to confirm. Yep, 4th April, 12:30 p.m. noon, just after noon. Yeah. So it's just here on the hourly chart. You can see here, right? 12 o'clock. So you can see my crosshairs. So this is when the RBA announcement was made at 12:30. So let's just go into the 30-minute chart. That'll be better. Right. Yeah. So here we go. So this was when the announcement was made. And as they didn't raise interest rates, the Aussie dollar sold off, right? So they basically paused. There was no rate hikes and Aussie dollar started selling off from about 67.83 all the way down to as low as 67.21 during the course of the day. And of course, after that, it has rebounded a bit, it has pulled back a bit and continued its downward slide again. So as you can see, um, interest rate decisions make a pretty significant impact on the currency pairs that we are watching. So now let's just scroll back out into the 4 hour chart and let's try and draw some support and resistance lines and do some technical analysis so we can try and decide what is the likely move for this pair moving forward. Okay, so we're just going to start off with some simple support and resistance lines. So what we like to do is we'll try and draw the first support. Okay, well, maybe in this case, it'll be easier to draw the start off with resistance levels first. So what we like to do is look at a level that crosses various price points or candles. So in this case here, As you can see, we can set this up as our second resistance, right? You can see that is the second resistance level here. And also what we like to do is, okay, let's do a quick Fibonacci uh, retracement here. Okay. And right, okay, so we've got this. Yep. Let me just, okay, we put, okay. So we've seen the move down from 67.94 all the way down to 66.76. So we've drawn this as a Fibonacci uh, uh, ex, uh, extension. And then well, the 50% retracement is looks pretty important because as you can see, after price dropped as low as 66.76, it has actually bounced up, came close to the 50% retracement, and has started to uh, come down again. So this level and this price action looks like a pretty important level, and it also seems to cross several other uh, candles as well across if you look across the chart. So this could be another area for drawing another support resistance line, right? Okay, so if you look here, it crosses across, cuts across several candles, right? So we something like this would be pretty, yep. Okay, so as you can see, we can label this as our first resistance. So okay, the idea behind this is we have drawn a Fibonacci uh, 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 retracement level from 67.94 to what is this, 66.76, and then we can see that the price action has actually or rejected the 50% retracement level and has started to pull back again. So this looks like one of the key resistance levels, which also cuts across the other intervals as well. And of course, we can use the highest, like the swing high here, as the second resistance level, right? So now we've identified a couple of resistance levels. Now let's just look at identifying the support levels. Okay, immediately, one of the most recent levels we can look at, since it has bounced off here, right? At this recent swing low of 66.76. And if you look across, doesn't seem to cut across many levels on the candle. So let's just put this as first resistance on first support, sorry, at this point. And then we can try and see where we can potentially find the second support. So over here, you can see price has consolidated around 66.40 as here stated here. So this looks to be like some sort of support. And at the same time, when you look across here, this looks to serve as a level of resistance. So what we want to look at is a level that it intersects several price candles, which acts as resistance and support. So that would determine that uh, this eye level that we've identified is a pretty significant level and something that we should keep an eye out for. Okay, so we can put this here as our second support, right? Okay, so I got a bit of a cold, so excuse me for that. Right, thank you. Okay, right. Okay, so what we've done is just to quickly summarize, we've looked at the Aussie dollar chart based on the 4-hour time frame. And we also knew that there was a RBA cash rate announcement on Tuesday, where the central bank did not raise rates and caused the Aussie dollar to sell off. So based on that, we've identified support and resistance levels using the Fibonacci extension, or yeah, Fibonacci retracement tool. Sorry, yeah, Fibonacci retracement tool. Right. Okay. So now, as we've seen, it's rejected this 50% retracement level, which was at 67.37, and Aussie dollar seems to be dropping towards its first support of 66.76. So after the announcement was made, and you were actively watching this pair, you would have started shorting it based on the fact that uh, the bank did not raise rates, and then you would try and see what would be the best entry points for shorting, and yeah, best entry points and your exit points, right? Okay, so now, okay, it seems that the the pair has already started its move down from 67.18, and it's around here. So now uh you could probably it might be a bit late to enter a short now, because it looks like price price looks set to hit 66.76, but during the course by the end of this week, and most likely it could bounce up again. So depending on uh, your trading strategy, probably maybe it's a bit too late, or maybe not. If you could it's possible for you to take a position here and have your first profit target at 66.76, and your stop loss close to the 50% Fibonacci retracement. Because we are pretty late into this trade, if it ideally entered around 67.20 or 67.10, very likely the uh, somewhat ideal level to place your stop loss would be at the first resistance, because it's not too far away from an entry point. But now it's moved a little bit down away from the ideal entry point. So you could still put your stop loss here, although your risk reward ratio wouldn't be very good. So it is pretty important to evaluate the situation and then to decide whether to put on a trade as well, right? So in this case, it does seem like Aussie dollar is going to push further down and hit 66.76. And then from here, it could consolidate or maybe do a slight bounce as well. If there's a lot of dollar strength going into the end of the week, we might actually see Aussie dollar break this first support and make a move towards the second support, right? Okay, so this is what we have seen for the Aussie dollar. Okay, so the next up that we saw that following day on the 5th of April was when the RBNZ, so the Reserve Bank of New Zealand, raised interest rates, right? And this was a pretty uh it's a surprise move, because the interest rate was previously 4.75%, and markets were expecting a hike of 25 basis points, bringing it to 5. See, the forecast was 5 here, but instead they raised 50. Okay, so let's go to New Zealand. Let's go to the Kiwi pair. Okay, let's delete all drawings first. Start with a fresh canvas. So as you can see, that was on. Okay, let's break it down into a smaller time frame. So this happened at 10 a.m. on 5th April, UTC plus 8 timing. So as you can see here, this candle is 5th April 9:30, and the next candle is 10 a.m. UTC plus 8. As you can see, the move uh, shocked market participants and lit a fire under the pair. So basically, Kiwi skyrocketed from 63 cents all the way as high as 63.79, right? So that's about 80 pips there, almost 80 pip move in half hour. But after that, it started pulling back quite significantly, as maybe it could be due to profit taking. And also, dollar strength has recently come into play as well. So because of that, the dollar strength seems to be over shadowing the fact that the RBNZ was very hawkish, and it seems like the dollar strength is has taken over, and the Kiwi uh, has been trending lower, right? So this is on the 30-minute chart. Okay, so let's just zoom out a little bit into the 4-hour chart, and let's try and draw some support and resistance levels. Okay, so let's see here what we got. Okay, right. Okay, so looking at the Kiwi, as just to quickly recap, so on the 4-hour chart, this is where the RBNZ announced their cash rate hike, where the Kiwi shot up and then it started pulling back pretty significantly, right? Okay, so let's try and identify several support and resistance levels. Okay, one of the first. Okay, Okay, right. Okay. So immediately, one of the first, I guess, support levels would be again somewhere around probably something around here. Okay, we could, as you can see, it has bounced. Price has bounced here, here, over here as well. It consolidated a bit, bounced before it finally broke through. And then the Kiwi also has retested this as a resistance at a few instances. One, this is pretty close. Two, three, four, five, six, and before it finally broke out. And now price is headed back to this level as well. So this looks like a pretty significant level, and we can label this as the first support. And we can also see um, a rising a trend line. Oops, wait, hang on. Where's my? Here we go. Sorry. You can also see a rising trend line here as well. Okay. So we've identified two levels of support. So one is this horizontal line, which cuts across uh, various price points all the way from 7th of February till the present time, and it's a pretty significant line where resistance has been tested a few times, support as well over here, and now and this also came close to testing support, and now it really looks like this time price could definitely touch this support line and perhaps even break through, which means that if it breaks this first support, the next support, intermediate support, would very likely be this trend line here. Okay. Right, and then we can also try and identify a second support level on a horizontal basis. So if you look, this looks like a area where price has bounced off a couple of times, right? And it also cuts in line, is pretty much in line over with this price action over here as well. Okay, so we can label this as our second support. Okay, so we've identified three levels of support or areas, right? Two horizontal lines and a rising trend line here. So it does look like the Kiwi is going to break through this first support here by the end of the week. Okay, now let's look at some resistance levels. Okay, so this is when we had the RBNZ announcement where price spiked. So this could be, looks like a decent area for a first resistance, right? We can, as you can see here, this has, price has tested this level 63.88 once, twice, and on the third time it came close, not didn't exactly touch it, but came pretty close. So this could be a potential resistance level as well, right? Okay. Oops, my bad. Hang on, let me just get this right here. First resistance, okay. And then if you were to look a little bit further out, the second resistance would be probably, this would be something somewhere around here where price has tested this level a few times before breaking down. So now this is now become this support here previously, which was a support, can now be used as a second resistance level. So based on what we are seeing, the dollar strength is coming into play, and the Aussie and the Kiwi are both selling off pretty aggressively, right? Especially for the Kiwi, doesn't really not doesn't I wouldn't say doesn't make sense, but you would think that when the central bank has raised rates, interest rates by 50 basis points instead of the 25, you would think that it would be a very bullish uh, catalyst for for this pair. But in fact, actually, it had a quick spike on the day at the time of the announcement, and it has actually pulled back pretty significantly. And right now, the theme uh, is running with the dollar. So the dollar strength is picking up with respect to Aussie and Kiwi and is pushing the pairs down. So it's very likely by the end of the week, we should at least the pair should at least touch the first support here. And similarly for the Aussie, yeah, we both of these pairs are likely to uh move move lower and touch their first support. Okay, so since we are talking about the Australian dollar and the Kiwi dollar, right? Let's just look at the DXY, right? The dollar index. Okay, so this is again the 4-hour chart. Okay, so let's just clear all the drawings, start with a fresh canvas. Okay, let's maybe zoom in a little bit. So for the 4-hour chart, okay, maybe just for the dollar to get uh, a little bit more perspective on where the dollar is heading. So this is a dollar daily chart, and the dollar index has actually peaked in the end of September at almost 115, and since then it range bound for a few weeks between 110 and 113 before it finally broke through and has been trending lower and lower. Part of this reason is due to rate hike expectations tapering off. So as although the Fed was still raising rates throughout the second half of 2022, the dollar actually started selling off. Bond yields actually started heading lower as well. So rate hike expectations were falling, and because of that, the dollar itself sold off, and bond yields as well. As you can see, this price action, the dollar has been in a downtrend from November till early Feb this year, and then it has made a move up. It has, like, I guess, some sort of relief rally, right, all the way from November to the first week of March as well. So for about 4 weeks before resuming its downtrend again. So there's a lot of dollar weakness here, which runs yeah, actually it runs uh, contradictory or in opposite to what is happening with the Aussie dollar and Kiwi pair, right? So you would also think that as the dollar is weakening, these two pairs should be gaining, but in fact, they have actually weakened, especially this week. Okay, so let's go back to dollar index. Yeah, so the last couple of days we've seen a bit of uh reversal in the dollar, right? And then, but it's very likely that it could hit the trend line here or come close to the trend line before reversing and probably start to move lower again. So we might see dollar weakness coming back into play. Okay, so if you look on the 4-hour chart here, right, I guess one of the first obvious things that we would see is this downtrend line here, right? So this is a very clear move down or trend line down. Okay, so this is a resistance level down here. And also, let's now try and identify several support levels as well. Okay. Okay, so one of the immediate support levels would be here, which have price bounced at about 101.47. So let's just draw the first. Okay, let's maybe zoom out and see, does this level line up with any other significant levels in the past? Yes, you can see this does look like a overlapping support where we've had price test this level a few times. Right, so we can label this as the first support. So as you can see, at the start of the year, throughout January, right, this level of 101.52 has been tested several times. So it looks like a pretty significant overlap support. And it finally broke through at the start of February, and it bounced back up, and the dollar index rose before coming back down again. And we have tested this first support again. Okay, and the second support, we would naturally take it at this level here. Okay, so we can label this as a second support. Now, if dollar weakness comes back into play again, right now we see the big relief rally. This could be a combination of short covering. So what short covering is when traders who were short probably from 102.50 onwards down, they're probably closing out their positions. So when they close out their positions, they're actually buying back the pair, right? They're buying back the currency. As they buy it up, they drive the price higher. So once more some shorts have been closed out, we may end if the dollar weakness continues and traders think that this is a good opportunity to start shorting the dollar index again at probably around 100. Well, okay, it's already dropped to 100, below 102. We may see further downside action on the dollar index, and it might hit the first support again. Right. Okay, so let's look at, so we've identified several, a couple of support levels together with the uh, resistance trend line. Let's look at some overlapping resistance levels. Okay, so for overlapping resistance levels, once again, let's look at a level which overlaps several candles. So if you just look at this immediate point here, we can see that 102 uh, overlaps this candle here as a resistance, acts as support across here from end of March till early April. And it's sort of, yes, you can see it sort of acts as a resistance along here and support along here. Yeah, just roughly, right? Roughly, if you were to look at it. So yeah, you could probably, yeah, let's just put this here. So, okay, so we don't really have to be exact with that level. Of course, you can zoom into a shorter time frame if you really want to be precise with the levels, but because we want to look at it at a slightly longer time frame, so that, and then we want to see it should cover as many candles or overlap sections as possible. So the more points you have interacting with this level, the more significant it acts as a resistance or support. So okay, so it's acted as a resistance here once, as a support here and over here, and towards the end of March. And also it's acted as a sort of support level here at the end of January, acting as a bit of resistance here and a bit of resistance here, right? Okay, so this looks like pretty good uh, level to identify as the first resistance. Let's just look at the second resistance now. Second resistance, let's see. Okay, we are looking here. Okay, so okay, this looks like, as you can see, a price at 103 has been, this level has been acted as a pretty decent support over here, and also acts as a resistance at this level here, right? And it comes intersects pretty nicely with the downward trend line. So let's just uh, set this up as our second resistance level. So yep, let's put this up as second resistance. So as you can see on the 4-hour time chart, we have identified uh, two support and two resistance levels, horizontal overlap resistance and support levels, together with a downward trend line. So now that we know uh, where our levels are, we are able to identify trading opportunities. So for example, if we thought that dollar strength is coming into play and looks set to continue, perhaps if you were looking to go long, a potential entry point could be at about 102 if you're someone who likes to use a breakout strategy where it breaks through resistance levels and the recent high candles here. So maybe you could take a position to go long here, and your first profit level could be somewhere along this trend line here, right? And your stop loss would be somewhere around here, the first support, or anywhere in this range within yeah, between the level just above the first support, depending on your risk reward ratio, right? Once you've calculated your risk reward ratio and how much you're prepared to risk, you could adjust your stop loss levels and take profit levels based on the resistance and support levels identified over here. Yeah. So, and conversely, if you're thinking that, okay, this resistance is going to be a major headwind for price, we would be looking to short price around here. and with the first take profit level and the first support. And we could put a stop loss at about here 102.50, which is in line with this downward sloping trend line, right? Okay, so this is how you would use resistance levels: first support, first resistance, second resistance. So the key would be to identify overlapping areas which can be identified as potential resistance and support levels. uh, and we do this on a 4 hourly chart or even a daily chart, because the more points you have, the more significant that level will be. Right? There's no point just putting it here, for example. Yes, maybe on a shorter time frame. Yes, of course, on a shorter time frame, putting it here, you could say yes, this is a pretty important support level, but it doesn't really connect with anything else, right? If you look at in terms of support, it just support here. So it it ultimately depends on your trading strategy and style. So, but the concept is the same, right? You would want to look for multiple points uh, that overlap a particular horizontal line, be it as a resistance or support. And a good way to do it is also probably start on a daily or 4 hour chart. So at least we get a bigger picture of where price is heading. Okay, so this is a dollar index, and also, okay, yeah, let's do a Fibonacci here as well. So this, yep, so we can see here. Yeah, okay, we got a Fibonacci retracement here. Okay, so this is a nice move down. So we've taken the peak and the bottom here. So okay, let's just put all the fibs up. Okay, and try and identify any key levels here. Okay, so immediately we can see that the 38.2 Fibonacci retracement lines up pretty close to where we've identified at the first resistance level, and it's sitting on top of the candle, right? And also the 61.8% also lines up together with the downward trends on the next level. Yeah, okay. So let's just clean this up a little bit. We don't need this. We don't need the 78. 61 also is a bit too far. So let's just keep so okay, let's just keep 23, 38, and 50. So as you can see, as price hit 101.52, it started retracing back. So the first level of resistance would be 23.6 Fibonacci retracement, but it's actually broken through that. And where it's actually really run into headwinds is the 38.2 Fibonacci retracement, which is also a overlapping resistance level. So that it is key to use, I guess, at least 2 to 3 uh, indicators to identify potential resistance or support levels, right? You can't use any indicator in isolation, right? Or any technical analysis tool in isolation. At least using 2 or 3 would be good. Again, you don't want to clutter your chart with like 5 to 6 different uh, indicators, because then it's just noise. It doesn't make sense. So you use indicators that you're comfortable with. And what we like to use here at uh, with EFG is we like to use overlapping support and resistance levels together with fib, plus maybe 1 or 2 other indicators depending on the charts. Right. So as you can see, the 38.2 Fibonacci retracement is actually lines up with the first resistance level and acts as a pretty strong headwind for the dollar index. So based on these uh, points and based on this analysis, it is probably likely that if you were to take a short position, if you think the dollar is going to continue to weaken, you would take a short position around here, 101, 102, and looking for a um, profit, looking to take your profit at the first support at 101.528. And you could probably use if you don't want a very wide stop loss, perhaps using the 50% retracement would be a good level for your stop loss if you don't really want to stretch it out, because sometimes it doesn't make sense to have a stop loss at the second resistance, right? I mean, what's the point of setting your stop loss at the second resistance when you've entered at the first here and you're going to take profit here? Naturally, even without calculating it, you can see that your risk reward ratio doesn't make sense. You're risking far too much for the profit, right? Or for the potential profit. So again, it's good to identify the resistance levels, right? Overlapping resistance support levels, but don't. I would also not recommend just placing your stop losses or your take profit levels blindly at such uh levels, right? You would take into account maybe Fibonacci retracement, take into account your risk reward ratios so that you actually put in a trade that is actually pretty realistic in terms of risk reward and resistance and support levels. Okay. Another big move. Okay, we've covered Aussie dollar, Kiwi based on the uh, Reserve Bank moves that were done. And of course, these two pairs tie in with the dollar index as well, right? Okay, so now let's just look at something else that has moved. Okay, let's look at gold. Okay, this is again the 4-hour chart on gold. Okay, so, okay, let's see any, okay. Let's just quickly see on the daily chart here. Okay, so gold uh, has been falling since April of last year. It has been a strong downtrend, and it bottomed in the last quarter of last year, so the October onwards. It bottomed at about 1600 and has made a very strong bounce up. And naturally, nothing goes up or down in a straight line, so we've had a pullback here, and it's gone back up again. So gold, as is priced in dollars, it also makes sense to pay attention to what the dollar is doing. So generally speaking, when the dollar is strong, like what we've seen in the early of 2022 all the way to the middle of last year, the dollar was actually gaining in strength, which was also uh, which which usually negatively impacts the price of gold. So gold was actually being pushed down lower as well. And then once dollar started uh, heading lower, so dollar peaked in about October, right? Dollar peaked in September, consolidated till November, and then finally started dropping in value, right? The dollar index. So that's what the dollar index was doing. So now if you look at that with gold, so similarly, September to November was when the dollar peaked, consolidated, and started falling in price. Is at the same time where gold was rising as well. So once it's important to understand the relationship between gold and the dollar index and all other majors that are um, paired against the dollar. So once you understand the relationship between them, you will usually it's easier to trade the pairs, right? So if your dollar index is rising and gaining strength, uh, it would make sense that all the other majors that are paired against it would weaken, just generally speaking. And then conversely, if the dollar index is dropping in value, all the majors that are paired against it are likely to be heading higher. So it's important to look at if especially with the majors, it's important to look at what the dollar index is doing and try and identify what is the longer term direction of the dollar so that we can then identify trading opportunities on the majors. And also similarly for gold, since gold is priced in dollar terms, it's also important to see. Naturally, it's important to see how strong or how weak the US dollar is. Okay, so this is on the daily chart. Let's just zoom in on the 4-hour chart. Right. Okay, so let me just check something here. Okay. Right. Okay. So here we are on the 4-hour chart for gold. Okay, so let's try and identify several support levels. Okay, maybe we can start off with maybe the Fibonacci retracement first. Okay, we see a very good opportunity here to identify. Okay, so we can see this starting at 1950 all the way to 2032. So this recent move in price of gold. So it's, let's see, where can we identify several support and resistance levels. Okay, immediately the 23.6% level looks like a very immediate support level. As you can see, price has bounced off this a couple of times, and and gold is starting to go higher over here. So perhaps we can label this. Let's see if it intersects. No, it doesn't really intersect with any other point. I think it's a bit too far. Let's go just see on a daily chart if this 23. No, it doesn't really intersect with any other overlap, or doesn't overlap with any other candles, right? So that's a bit too far. So let's just look at it here. So we can now, based on the Fibonacci retracement, we can identify this as our first support level. Oh, hang on, sorry. Oh, okay, sorry, we didn't need to go that far actually. Over here, it sort of lines up with this candle here, right? On 20th March. So we had a peak here. So you could say this is some sort of overlapping support, right? So we can label this as the first support resistance. Price over here, in retrospect, rejected this level, came back down and broke through this level recently on Tuesday, and now is acting as a support. So what was previously a resistance has now become a support based on the Fibonacci retracement of 23.6%. Okay, and the first resistance would naturally be, in this case, we don't see anything nearby. Let's just zoom out. No, see, it's still a bit way too far. So let's just label this as the first resistance. Here we go. Okay. And let's see if you want to try and label a second resistance. Okay. If you look at it, line up the first resistance here. So if you really want to look at the next level, if price were to break through this first resistance, it would be the high that was set in March of 2022, right? Just after the Russian, the invasion, right? We had a major geopolitical event which caused the price of commodities, be it precious metals, energy, agriculture, all to spike. And that's why we had a huge inflation problem. So you can see the high was set in March, and this will now act as our second resistance. So if gold was to make a move higher and break through the first resistance, the next level to look out for would be this 20 second resistance, which is 2070. Okay, so now that we've identified the first and second resistance and the first support, let's just zoom back in a little bit. Okay, and see what else can we see, what else can we identify, or which level can we identify as the second uh support. Okay, so second support, we've looked. Oh, okay, let me, for the fibs here, let's just put all this up at 61 and 78 were not in. Okay, so if you look, okay, fifth at the next, if it were to break the first support, I guess probably 38.2 could act as the next immediate support. As you can see, there's several overlapping candles here, which acts as a resistance for these candles. 50, no, not really. There's no really overlapping points. And 61 is also another support. You can also consider this as a support, where at 61.8% fib retracement, we've had the price action consolidating here, acting as a support. Price action hitting resistance here, and also hitting a little bit of resistance here and here. So yes, we could label. We have 2 points, I guess. We perhaps, yeah. Let's just now 38.2 is a potential support. Okay. Let's just not. Let's just put. Where is it? support. Yeah, sorry, support dotted. Let's just label it as a green line for now for this. And then the next one would be at the 61.8% Fibonacci retracement. Okay, so let's just okay now. We don't need to get too, I guess, specific about how do we want to label the support levels. So in the immediate support here, we can call this first support. And based on Fibonacci and overlapping uh, levels, we can say that 38.2% is probably another uh, intermediate support level, something to take note of. And the next one after that would be at the 61.8% Fibonacci retracement level. So as you can see, we have used the Fibonacci retracement together with overlapping horizontal lines to identify support and resistance level. So once we have this set up, so today now, like you would, if you were still bullish on gold, you would say yes, okay, at 2013 would be a good level for me to uh, go long on gold again, and for maybe the first uh, level of profit taking, I would like to set it as the first resistance. So 2032, right? So you could take a position around the first support with the aim of taking profit at the first resistance. And again, you look at the where to set your stop loss. So again, if you were to just blindly choose the second support here, the line here that's labeled as the second support as our stop loss level, it just the risk reward ratio doesn't make sense. We are risking twice the capital to potentially gain for one, right? It's not in your favor. So there's no point risking that much to on any trade, right? Whether you're long or short. So sometimes we just have to be realistic as well. And what we've seen here that okay, maybe this is a probably a better level to set your stop loss if you had decided to go long, right? And maybe this is probably like a one-to-one risk reward ratio. So maybe this even at this level, you would say, okay, maybe I would like to have something tighter. Then it all depends on your preference. So, but main thing is to identify resistance, major resistance and support levels together with Fibonacci retracement. Have a confluence of intersecting points that we can identify as support and resistance levels that would likely uh, be significant, right? We want price action to sort of respect these levels and then either bounce from it or break through it to go down, right? So this is how we would uh, identify several levels of resistance and support. Okay, I'm coming close to the end of the webinar. So I was just wondering if any of you have any questions that you would like to ask based on what we've discussed, or if there's anything you'd like to see across any other currency pairs or any other commodities such as oil or any of the other majors. Yeah. Um, are there any questions? All right. Okay. I just see Amit and I just see David. Okay. I don't see any questions coming in. Okay. So with that, I would just like to thank you for your time. I hope you found this informative. And I guess the key takeaway here is um, start with a slightly uh, longer time frame where you can get a good overview of where how the particular currency pair, how that particular commodity has been moving, right? You want to identify longer term trends so that you can identify the right trading opportunity uh, for 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 that particular instrument. So once you've done that, you are able to look at you're able to identify overlapping resistance and support levels and use Fibonacci retracement in conjunction to identify significant levels of resistance and support. right? Okay, so that would be the main takeaway from today's webinar, and also to understand the relationship between the dollar index, gold, and the major forex pairs, right? Okay, so thank you everyone. Hope you have a good week and enjoy the weekend. All right, take care, guys. Bye bye.